thresholds sort of look, low 200s. So we're doing all right with jobless claims, but this is really, if it really starts to miss, in the upward direction, we'll take note. But for now, doing A-okay with the labor side of the dual mandate. No real reason to do something for that. Mr. Warsh speaks tomorrow. Just a reminder that technically today, Jackson Hole kicks off, but the speech is probably more important tomorrow, 10 o'clock. Mr. K-Dub, Kevin Warsh, will start to address his Jackson Hole speech, all right? So paying attention to that as it relates to the economic calendar, okay? University of Michigan consumer sentiment and inflation expectations revisions at the same time frame, the 10 o'clock time frame. We'll pay attention to that. And the benchmark payrolls revision, that could also be interesting. Remember, the Fed was knocking off something to the tune of like 600,000 jobs automatically based on priors, and this one came in even heavier on the last go-around. So we'll pay attention to that. But tomorrow, really all about the 10 o'clock time frame. Mr. Warsh will be speaking, okay? That's what we have going on over there. Maybe we stream that, maybe we don't. If we do, I'll probably just, put him on the loudspeaker, show some price action, and continue doing my thing on the other side. With the gang, we'll see. Nonetheless, we move forward into the Fed Watch tool, and let's just see what the market's thinking about as it relates to interest rates. You can still see here an extended period for a pause into the next meeting, which of course is in September. There is no August meeting. It's the 27th already. Come on now. And then we're looking at a potential hike in here for about December of 2026. To end the year, a little bit of a hike. Bev 5000 in the chat with the $9.99. Just want to thank you. Well, hey, I just want to thank you for the $9.99. Hopefully you are doing well in your trading, doing well this week, next week, and all the weeks that have preceded. And hopefully the show's giving you more than $9.99 of value, certainly. And trading is on the up and up, or just continuing to be well, whatever it may be. Bev, appreciate that, and hope you have a fantastic trading session today. We've got ourselves an additional rate hike being priced in over here. That is going to be for the June timeframe of 2027. Remember, it's not like we're saying, oh, it must happen this way. We're just sort of saying the market is pricing in at the moment about 1 to 2 rate hikes additionally versus where we're at, right? Let's move forward over the economic calendar here. Nope, wrong one. Sorry, the earnings calendar is what I'm looking for. There we go. And let's just quickly buzz through some earnings, right? We, of course, had NVIDIA knock it out of the park. The numbers were phenomenal. The guidance walking forward was phenomenal. The market was a little bit hesitant to start, but as soon as that conference call kicked off, as soon as the market heard that sweet, sweet voice from Colette talking about the numbers, it was game over, and we were just right back up into a new high. Jensen brought us home with a pretty solid end of the call on the Q&A, and honestly, we just kind of settled out higher. So NVIDIA strong there for the semiconductors, as well as also, notably, Jensen really kind of made the bull case for memory again in the conference call, saying memory is the constraint. Memory is getting as pricey as it gets, and we've just got to keep paying through the nose for this memory stuff. It's even going to compress our margins, right? That was one of the concerns when they said, oh, margins are going to move from 75% to 74%. Oh, God forbid you lost a point of margin compression there. But NVIDIA, just a unicorn of a company. Salesforce reported the numbers were great and the stock is gapping up. CrowdStrike, the numbers were great and the stock is gapping up. Okta, the numbers were great, the stock is gapping up. I did not look at Everpure, but maybe it's higher, maybe not. I would think that's kind of a storage play. And then Nuantix was higher last I looked last night, but not nearly as much as something like an NVIDIA. Before the open this morning, we're going to get Best Buy. Not overly interested in that. Not really interested in anything else through the lineup here. Instead, after the close, all focus will be on Marvel, Irene, Autodesk, Affirm, Ulta Beauty, Workday, SentinelOne, Rubrik, as well as Elastic. A lot of software names in here. But primarily Marvel moves the needle for hardware. That, of course, is just kind of already moving in sympathy to NVIDIA, but that's your pure play for the ASICs side of the trade, right? Custom silicon. What else? Probably watching Rubrik as the leader. It's CrowdStrike certainly, but Rubrik has acted cleaner in terms of price action in the cyberspace recently. We'll see if Rubrik wants to wake up and offer any sort of setups over there. Irene, it's a long-lost cousin of NBIS at this point. I don't even think they stay in the same lane anymore, but we'll see what they have to say for those clouds. All right, NeoCloud there. Let's jump on over to the top line figures courtesy of CNBC. What do we see? Let me give this a refresh just to make sure we're looking at the latest. Yes, we are. Here we go. We've got ourselves the Dow futures down about a big old whopping 1 basis point. Oh no. S&P futures up about 41 basis points, NASDAQ futures 93. The oil futures are up about 27 basis points, but still 82.45 on the barrel prices underneath our threshold of about 85 for anybody who's been tracking and keeping score at home. As long as we're underneath 85, things feel a little bit better for crude. US 10-year is off just ever so slightly, about 0.4 basis points, 4.66 on the percentage is the yield itself. We still need to get back down underneath the magic number, 4.5%. If we could drop that to the downside, boy oh boy, would you see, I would think, an explosion in the market to the upside, as a re-rating, a PE multiple expansion rally would potentially kick off. So paying very close attention to that US 10-year for now, though. It's still kind of problematic at the range lows. We talked about it a little bit last night in the midweek market update video. I know those come out late when we do the double duty stream with the NVIDIA earnings, but if you didn't watch the video, it's basically, if you're ever like, oh, how does a trend count work? How does a trending market, work? And how does an hourly pullback lead to a daily high or low? If you're interested in that type of conversation, the first 10 minutes of that video is all you need to watch, and I promise you'll get a better sense for it. Anyway, moving forward, let's see what else is going on down here. NVIDIA jumped 7% after blockbuster earnings report boosts AI confidence. I think that's a fair enough assessment. I think the bigger thing to pull in on was the MU and just basically the continued pounding the table. Like, really, Jensen was like, come on, just memory, right? It's like back in the day, developers, right? It's the same sort of energy. It's memory. We need more memory, right? So it's the same thing. We've got ourselves NVIDIA agreeing to buy Hugging Face for about $12.9 billion. Interesting there. NVIDIA lifting the chip stocks. Sure, NVIDIA had a blowout quarter. Awesome. No problem. What else is going on over here? We've got U.S. considers fresh round of tariffs on semiconductors. Okay, just when you think everything's in the clear from Mr. Jensen over here, Mr. Leather Jacket, the suits come out and say, nope, we're going to tariff that stuff. We've got American Airlines adding a batch of new international routes on its XLR planes after Meta's landmark settlement with the state AGs, attorney generals. Legal headaches remain. Yeah, there's some sort of fine print that needs to get settled out, but pretty big win for the metaverse there in terms of the actual dollars that they're going to have to pay out. In terms of continuing along, we've got Citi thinks one of the year's best performing sectors, is finishing its bull run. Which is it, Citi? CIA chief reportedly made a secretive Moscow trip to warn Russia not to attack NATO. What is going on here? Come on now. Stocks making the biggest movers pre-market: NVIDIA, HP, Salesforce, Dollar General, Everpure, and more. Unfortunately, somebody said that they bought HP yesterday. They bought the wrong HP. You don't want to buy HPQ. You want to buy HPE. If you're trying to trade the AI trade, HPQ is printers. It is computer monitors, mouses, keyboards. You want to buy HPE. You, my friend, want to get on board with HPE, Hewlett-Packard Enterprise, bare metal, and on-prem, right? Anyway, what else is going on over here? Best Buy, topping quarterly estimates, raises outlook as computing shows strength. Interesting. With the Bus family's Laker dispute, yada, yada, yada. Qatari PM, de-escalation tensions. This is always wild to me. These types of photos. Has anybody seen like the graveyard shipyards over in like, I don't know, maybe India or any of those coastal countries over there where they just run the ships straight on ground? I mean, this is a little bit different, obviously, but those images always just kind of strike me. What else is going on here? Let's see if I can maybe find what I'm talking about, just in case you haven't seen it. Ship graveyard in, yeah, like something like, I don't know. Geez, and the guys are just running into the water barefoot. I mean, God bless them, but my goodness, shipbreakers. That's what I'm looking for. Shipbreaking yards. How do I open this image over there? Ship breaking yard. This type of stuff. My goodness. Copy image link. How do I do that? How do I do this? What am I trying to do here? I just want to copy the image. Come on now. Open image in new tab. There we go. I don't know why. These things just like this, right? Just run the ship straight on shore, then go out to it bare feet in the muck. I mean, my God. Bless them. God bless them. Anyhow, moving forward. What else do we have going on over here? Post-penny economy. There's no more pennies. This toy thing, squishy, whatever. Nearly 1,500 missing. This was brutal. Has anybody seen? Speaking of like shipbreaking yards, what else is brutal is this whole Nepal flood. Oh my goodness! Has anybody seen the images of just absolutely devastating floodwaters coming down and just the amount of force that those floodwaters have? I mean, again, talking about God bless, sending out a prayer to anybody, my goodness, family, friends, whoever impacted by these Himalayan floods. I mean, the footage is so hard to watch. It's so hard to watch because just, all the little dots running around there, the people running around down there trying to escape. You see the force of the water and you just know, right? It's heartbreaking. So that's a tough look. Not here to pull on heartstrings this morning. Let's continue along and see what we've got in terms of stock-specific stuff. Crazy. Salesforce CEO Mark Benioff says that the SaaS or SaaS, SaaSpocalypse, is nonsense. Here's why. Yeah, Mark Benioff, good foresight to just sort of like hold steady through that. All right. What else is going around out here? Mail-in voting orders, Republicans this, that, Democrats this, that, OpenAI, sweeping report on Hugging Face agent AI hack. That's actually interesting. Maybe I'll open that in another tab and read it later. That's just interesting if you want to stay on par or on pace with the cyber stuff. Jackson Hole coming up tomorrow. We know about that. Raising price targets on Salesforce after defying the SaaSpocalypse. Anthropic and Nscale strike a $45 billion cloud deal. We've got 8:18 on the clock. We're going to make it in time for 8:20. 5 tools to lower your expenses. No sponsored credit card slot today in the U.S. is still watching allies for alignment of interests, even amid defense pullback, analysts say. Okay, that's it through the headlines this morning. More of a heartstring headline day today outside of what we already know is the main event, which of course is none other than NVIDIA earnings. With that being said, let's jump on over the charts. Let's do what we do best. ES 4-hour timescale is exactly where we want to be at roughly 8:20, or at least by 8:20 on any given day. And it, according to my clock, is currently 8:19. So grab yourself a sip of tea, coffee, water, whatever it is that you've got at the desk. And let's go ahead and I'll see you over at the screens in just a moment. Here we go. All right. Landing where we want to land. I believe I can take another sip. I left the lid off this morning. I had to make my own coffee this morning. That's all right, but it was made with love. It was made with perfection. Right? It had my own personal touch to it. Got to break out the grinder a little bit this morning. Crunch the beans. Let's go ahead and take another sip of this thing because it's beautiful. And let's go on into our ES futures in the 4-hour time scale. What do we got going on over here? We've got ourselves the ES futures certainly trying to turn for that higher low. Again, if you didn't watch last night's episode of the midweek market update video, I don't blame you. It came out pretty late just because of the full day of analysis with the NVIDIA earnings call. But let's just go through this very simply. We've got ourselves a push to a new high, right? And I'll just sort of recap what we talked about briefly last night. This is the highest high of the trend count. We know that for a 4-hour firm higher low to show up, the hourly chart needs to actually flip into a downtrend. Well, we certainly got that, right? We've talked about how this is an hourly downtrend a number of times. Great. What we then need is the hourly trend to flip back to up. We know that we started to go sideways down here. We know that we are staying over the previous double top. We're staying over the gap close level. We've not tested into the gap. We're sort of kind of supporting near a rising 20-day moving average on the ES futures. So is this still in the neighborhood of qualifying for a 4-hour higher low? The answer is absolutely yes. If that's true, then all we need to solidify it is an hourly trend change back to up. And we've been talking about this all this week in terms of the pre-market preps, right? This is nothing new. Nobody should be waking up here and saying, oh my goodness, what do you mean an hourly trend change firms up the 4-hour higher low? Like, have you been living under a rock? Have you not been paying attention to the pre-market preps? This is what we've been talking about all week. And we're finally starting to get it, right? What's interesting about this morning is that we are gapping up over the top end of the balance range from an hourly perspective, giving us an hourly higher high. And if the hourly higher high is going to do anything for the trend, it means that we need to then watch for an hourly higher low on a gap fade, right? We need a gap fade to yield an hourly higher low. So in terms of the 4-hour trend, the 4-hour trend remains in the upward direction, right? Noting that this is the higher low zone. I know there's like a bazillion HLs on the screen. This is the higher low zone over key structure that checks out. And now we're trying to change the hourly trend back to up. I want to be very clear here. I'm much more optimistic, and I am saying it that way. I'm not saying bullish. I'm saying optimistic. I am much more optimistic on the ES than I am on the NQ. The NQ still has a lot of work to do, but the ES looks to be doing better. It has a cleaner chart structure underneath it. If there's a place to look long, it's probably the ES. If there's a place to look short, it's probably the NQ. Okay? That is what we've got on that. Let's go ahead and clear this up and take a peek at the hourly chart. That way we can identify the hourly trend change that we were just talking about. wrong tool. Let's go ahead and zoom in on this. There we go. So the hourly trend, once again, is in the downward direction. We could see highs, we could see lower highs, we could see lows, we could see clearly lower lows, and lower lows. You've got a lower high happening in here. It kind of set yourself up for some equal highs intraday, then it's there, and even yesterday it was slightly underneath. So this balance range is starting to suggest what? Well, the lows, as we've been saying, have been getting more equal. On the bottom of the move, we've seen equal lows. Okay, that's a good first step for stopping the hourly downtrend. We have stopping power here, right, inside of this balance range. A balance range is good because it provides stopping power. It doesn't mean that it needs to resolve higher, but it does at least provide stopping power. It gives you a level to work against. So we've got equal lows, and this morning, based on the gap up from NVIDIA earnings, it appears to me that we will be getting a higher high over what could be redrawn, really. The flag lows are certainly important, but the way that this market's been acting, if we just go to an hourly chart with extended hours turned off, take a closer look over here, we'll leave that level up there, but let's maybe do this as well. Let's come in here and let's just do a little bit of something just like that, which sort of indicates our key hold spot. It's going to be right around 7,700 to about 7,500. 7,500. 7,700 to about 7,705. How about that? We'll bring this out to the end of the month, which, by the way, is like right around the corner. And then let's come into a hourly extended hours turned on chart. There we go. And take a closer look over here. So a couple of key levels that could potentially hold. All we've done is really just kind of subdivide this range down here. The hourly chart is bringing in that higher high via the gap up, right? That means if the hourly chart pulls back today, which is okay, we can get inventory correction, right? We always know that the gap rules will light the way. We'll talk about gap rules in just a moment on the 15-minute time scale. But for now, inventory correction is what we're paying attention to as potentially able to set an hourly higher low over the top end of what would ideally be this range in here, right? If we could stay over the hourly bullish buffer, previous day's high, basically gap fill reverse, something in this neighborhood would be pretty constructive for lows, maybe a gentle higher low. I'd call that a soft hourly higher low, right? SHHL. It reminds me of the company Stihl, right? Stihl, STHIL, or still, however you want to say it. Anyway, soft hourly higher low is there. This would be a firm hourly higher low opportunity, right? Higher low over the key prior structure, gap fill reversal, previous day high, right? Makes a little bit more sense. Kind of see where we're going with this thing. We know that we have stopping power. We know that we're gapping up. We know that there's some opportunity to trade the gap rules like such, into here, hourly higher low, up and out. That would be a major reclaim. If we could really spend more compelling time over about 77.25s, right there on the ES futures, that would be the spot. Okay, that is what we've got as it relates to that. Yeah, inner wave flow, I would certainly agree, but I would say more so on the NASDAQ. Inner wave flow, I do agree, but I would say on the NASDAQ, you're looking a little bit more like potential weakness over there, right? Potential weakness on the NAS. All right, moving forward from the hourly chart down to the 15, where we can start to get a little bit more granular and ask ourselves those 3.5 questions. Get started, never 4. Remember, what do we have here as it relates to the pathing and 3.5 questions to get that all kicked off? Here we go. Number 1, where do we want to even put this? A lot of lines on the screen today. Let's go top left. It just seems like this little quadrant. It's not really a quadrant. It's like a, I don't know, what is that? That would be an eighth of the screen? Sure. The upper eighth of the screen is where we'll put the 3.5 questions today. Number 1, where are we opening relative to the previous day's range? Obviously a gap up. That speaks for itself. NVIDIA earnings, rocking the market higher, and of course, looking pretty good there. So we'll put an up arrow, of course, and we go GR, gap rules are in force. We move along to question number 1.5, and we say, where are we opening relative to value? Obviously above, but do we have bullish buffer? The answer is yes. We say bullish buffer, boo-boo, bullish buffer, boo-hoo, no, boo-boo. Bullish buffer there, obviously opening above. Let's move along into question number 2. That's going to be way too small. There we go. Question number 2, that's way too close. How about over there? There we go. Question number 2, where are we opening relative to the overnight range? Here's the overnight high way up there at the top of the screen. The overnight low is down here at the bottom. Maybe not the bottom, but the midpoint of the previous day's range. As of right now, we're kind of opening, dare I say, like just a touch into the upper 50% of the range here. So we'll go ahead and say like squiggly up arrow for question number 2, but not really following through in a major way. We're not pressed into the overnight high, which is going to complicate things as it relates to the risk reward of the gap rules framework, right? Risk reward is not necessarily favorable here. Moving along to the final question of the interrogation, question number 3, we will break out the brass abacus on a Thursday for the math. Let's go ahead and shake the reset. Here we go. There we go. And let's go ahead and take a closer look. Carry the 4, exponential logarithm. Remember, if it's a parabolic curve, you want to use the third deviation. There we go. Question really, boo, like a, I don't know, what is that? That would be an eighth of the screen? Sure. The upper eighth of the screen is where we'll put the 3.5 questions today. Number 1, where are we opening relative is in the hourly downtrend. We have stopping power here, right, inside of this balance range. A balance range is good because it provides stopping power. It doesn't mean that it needs to resolve higher, but it does at least provide stopping power. It gives you a level to work against. So we've got equal lows, and this morning, based on the gap up from NVIDIA earnings, it appears to me that we will be getting a higher high over what could be redrawn, really. The flag lows are certainly important, but the way that this market's been acting, if we just go to an hourly chart with extended hours turned off, take a closer look over here, we'll leave that level up there, but let's maybe do this as well. Let's come in here and let's just do a little bit of something just like that, which sort of indicates our key hold spot. It's going to be right around 7,700 to about 7,500. Sorry, 7,500. 7,700 to about 7,705. How about that? We'll bring this out to the end of the month, which hourly high or low, up and out, that would be a major reclaim. If we could really spend more compelling time over about 77.25s, right there on the ES futures, that would be the spot. Okay, that is what we've got as it relates to that. Yeah, inner wave flow, I would certainly agree, but I would say more the upper eighth of the screen is where we'll put the 3.5 questions today. Number 1, where are we opening relative to the previous day's range? Obviously a gap up. That speaks for itself. NVIDIA earnings, good. Okay, all right, long side, crazy, absolutely crazy. So that's what we got across the 3.5 questions. Generally, we get 84.0, crazy. Absolutely crazy. All right. Take another sip of this coffee, which is just beautifully done today. And we'll move into the simplified pathing via the gap rules in just a minute. I'm going to say Albacus. Jessica Alba? Is that what's on my mind? Uh-oh. All right, 3, 2, 1, poof. Let's take a closer look at these ES futures through the lens of the gap rules and ultimately get the job done as it relates to anything we see here on the screen. Number 1, in terms of gap rules, let's go through them. We'll write them out, right? Gap rules. Gap rules. There we go, getting that mouse hand real active. Gap rules. Number 1, we are looking for a test and failure of the overnight high. Are we really looking for that? Probably not, right? But so we'll say test, then failure, back underneath the overnight high, ONH. And then, my goodness, do my eyes deceive me. We've got Mr. G with the 15 months up here in the office. My alarm may be lacking lately, but I still got to ask, who's making that Thursday Thunder? Don't forget to sign in at the like desk if you haven't done so already for complimentary soft serve vanilla ice creams on me. How about that? And a wafer cone from Mr. G. The man, the myth, the legend is here. Welcome. All right, number 1, look above and fail the overnight high. Moving along to question number 2. It's not a question, it's just a component of the gap rules. We would then like to see a failure underneath the opening print. Here's your opening print, right? We do something that looks like that. Yikes. Okay, ouch. Okay. Break underneath the OP, the opening print. Remember, the opening print is the opening print is the opening print. All right, just to be very clear. Now, it is a Thursday, so you've got to be on a daily chart or lower, but the opening print is the opening print is the opening print. It doesn't matter if you're on a daily chart. Doesn't matter if you're on a 4-hour chart. Well, it might matter. Depends on your market aggregations. Hourly chart, 30-minute chart, 15-minute chart, 7.5 market aggregations. Break underneath the OP, the opening print. Remember, people who use that, you get your 3-minute chart, you get your 5-minute chart, your 2-minute chart, 1-minute chart, 15-second chart. So the opening print is the opening print. Moving along to question number 3. Again, not a question, but rather a part of the gap rules. We then just look to target the gap close. So T1 equals the GC. Target 1 equals the gap close, as always. And then that's 3A. We always latch on to 3B and say the gap fill reversal, GFR, not the godforsaken range, but the gap fill reversal should target back to the opening print, OP. Okay? So that would look like that. All right, let's label it. This is number 1. This is number 2. This is 3A. And then this is 3B. All right, that's the gap rules framework in a nutshell as it relates to the references we're currently working with. Now, of course, the market open is going to be in here. So what's the problem with this potential framework? What's the problem with the way the levels are currently structured? There's no way in heck that I'm even thinking about shorting this thing under the opening print with a stop over the overnight high targeting the previous day's high. I'm not going to do it, right? Why on earth am I taking a risk reward trade that looks like this, right? Not all that interested in that. It's a losing proposition over the long haul. So, the win rate's just not high enough of this, right? The win rate of the strategy is just not high enough to take an inverted risk reward trade. Now, on the other side of the token, we could say, if point number 2 of the gap rules framework allows us a tight enough risk reward entry against the opening print failure, and we could do this, that's a different story, right? If we could do something along these lines, that isn't bad. Something of this nature with tighter risk against, the opening print, whatever this lower high is potentially here near question number 2 or point number 2, that would be better. That would be much, much better. Perhaps like an alternative here is that you don't even make it to the overnight high and then you just start rolling, right? You just get a little bit of a pop that fails back under the opening print and then you're lower into 3A, aka previous day high, right? So just please mind the risk reward as it relates to this potential setup actually playing out. How do I want to do this? I want to just take off that dotted line. Just needs to be a little bit cleaner, right? Just a little bit cleaner, and then I'll love it. There we go. It aligns perfectly now. And we move into question, again, what's with the questions here, Matt? Come on. Nobody's asking any questions. I'm done asking the questions. All right, we're moving forward. Number 4, in terms of the points of the gap rules. This is one of our favorites. It's one of the esoterics. It's one of the ones where if you know it, put it in the chat now. What is the hashtag? It just rolls right off the tongue. Very easy to say. GWAGFI. Go with all gaps that don't fill, F for fill, not P. We've dealt with fill. Immediately, I, GWAGFI. We go with GWAGFI. All right. Go with all gaps that don't fill immediately. Again, I see that the opening print is going to be lower here. I get it. The risk reward is certainly not there. It's going to be much more difficult to get over the overnight high. But if point number 1 and point number 2 are not true, if these two things come out and ultimately if these are not true, right, then we move. Whoa, that is way too big of a overshoot. There we go. Then we move down here to point number 4. Okay? If 1 and 2 are not true, right there, then we move to point number 4, which of course looks like this. Okay, that is number 4. Now, I would think that there's lower odds of that just because of where the opening print is, right? Lower odds of going with the gap because it's not filling because of where the opening print is. We continue to slide lower. So lower odds due to opening print location. Okay, that's kind of what I would say about point number 4. It's going to be a little bit more difficult to get a market that just really rips and roars over the overnight high as we're already sort of fading off a little bit, right? So that's that. And then point number 5, which of course I didn't say question. Notice how I caught myself. Point number 5 for the esoteric gap rules. I want to make an easier looking 5 for the eyeballs. There we go. That's basically picture perfect. You could take this 5 right here and you could put that in a handwriting textbook. Okay, just marvel in how nice and balanced that number 5 is. Number 5 is if value area, as we know, if value area, that is not a U, that is a V. Let's make sure it's sharp like a V. If value area, there we go. If value area cannot get overlapping to down, right, then as we know, odds of LDR, late day rally, increase. Okay, percentage odds, good. We could throw a little semicolon on that, make sure our code block doesn't break. We can, of course, close our squiggly brackets there, and we could say this wants to happen by our dependency of approximately 130, and then we say that is closed. All right? That's it. That's the way I would look to that one on this morning session. Those are the GWAGFI and value area rules. Basically would be like, in here, odds of a late day rally increase. That's number 5 because value area is just simply not overlapping to down. You could get number 4 to continue higher with number 5 as well. If that wants to shape up, but for the most part, we just want to make sure that we're staying over the previous day's range, and then we have increased odds of a late day rally. Okay, market's kind of getting, I wouldn't say spanked, but it is coming in a little bit, and it's just going to mean that your opening print again is deeper. The risk reward for this entire fade isn't really there. So one of the questions we might ask ourselves, right, is just, okay, if we're not going to fade this thing for the close, then we just want to watch bullish buffer. right? So an alternative this morning, let's just say alternative, alt, number 6, resolution of prior day high, right? ROPT. Which is just, do we come in here? It's an opening drive lower. That's number 6, right? Resolution of the previous day's high with bullish buffer. Basically, we just need to hold in there at 7,700. All right. So that's pretty much it. That's the simplified. It's almost the simplified pathing on the same exact screen. I mean, I would be certainly much more discouraged about the market if it starts to come down into here. Right, that is a huge warning shot across the bow that, you know, things are not great. You know, underneath 7,700. Okay, something just like that. This, I think, is just going to serve as the simplified pathing. I know it doesn't look very simple, but it is. I promise you it is. That's a crazy one. That is an absolutely bonkers one for today, but we're taking a screenshot of that. There we go. There it is. All right. That is what we're working with on that. Just the fact that the market's coming in here a little bit, headed into the bell, makes me think that, okay, you know, it's not so straightforward for the fade. The risk reward of the short side here is diminishing moment by moment. Moment by moment. Wow, this is a full sort of dashboard, if you will. Full dashboard of grand drawings on this screen. We'll talk about the internals here in just a second, but we'll let some people soak this up one more time as we take a sip of coffee. We'll go sip and poof here on what I'm dubbing the simplified pathing. This is mostly it, right? I'll draw it in maybe with less text on the screen, but that's mostly what we're paying attention to. All right. Let's clear it up. Are we ready? Wow, look at this thing just continue to slide. Continuing to slide to the downside. Pretty ugly. Pretty ugly. There's still a few blank spots left. That's true. What is all that? That's the gap rules, my friend. All right, 3, 2, 1. We'll get rid of it in a second. I don't have an acronym, but a cheat sheet, but I'll go through it one more time just because I know this is a little bit crazy for maybe those who have not been around for a long time, which is okay. Everybody starts somewhere, and it's nice to be clear. ONH, overnight high, right? ONH is the overnight high. OP is the opening print. GC represents gap close. GFR, gap fill reversal, right? That's over the prior day high. OP again for opening print. Hashtag gwagged feet. We all know that one. Go with all gaps that don't fill immediately. It's one of the most popular hashtags on X, right? It's trending on X right now. So gwagged fee, just a real easy hashtag to remember. Go with all gaps that don't fill immediately. ROPT, resolution of the previous day's high. Boo-boo, bullish buffer. VA, value area. OL, overlapping to down. If value area is not overlapping to down, the odds of an LDR, late day rally, increase. Right? That's a quick tour through the acronyms here on the screen, just to be pretty clear about what's what. As the market continues to push lower in the overnight, just understand that the risk-reward profile of the fade is worse and worse and worse. Right? Not good. Is the immediately for the gap not filling immediately, or immediately go with it when the gap doesn't fill? Immediately for the gap not filling. The gap should fill fairly quickly. In the first, it's a little subjective, right? It's between, for me, the first 5, 10, 15, 30 minutes of the day. If the gap's not filling, if we're leaving that unfilled, it's kind of telling you that the market's got a little bit more strength to it, right? So that's that. All right, let's clear this up. Let's clear it up after a sip. There we go. Sip and poof. Boom. All right. One more time, just with the lines. No crazy talk in terms of the words. And we'll update it instead of, the full gap rules. You're probably looking more like, again, resolution of previous day high is the more, reasonable outcome. If you can hold up over this spot, 7,700, bullish. Consolidation, ideally brigade bolts here. If you see something that rallies to here, it's probably a pullback off the overnight high, but then do we support and go up and out? That would be bullish for continuation. If the market fails back into here, that is our warning shot across the bow, ahead of Jackson Hole, mind you, right? Again, simplified numbers are just going to come in here at 7,700. The overnight high is 7,741. This spot is 7,750, as we know. This down here is 7,680. Top of the gap is at 57 still, 76, 57. All right, that's the look. That is the look. That's maybe a bit more of a simplified path headed into today. If we're here and here and here, that's also bearish, just a rejection of the bull flag lows with no support at the previous day high. All right, that level, what's that level? 77.25s? Okay, just fixing some stuff over here. Okay, good. Why can't I spell accommodate? 2 C's, 2 M's. I guess I only put 1 M over there. Okay, good. And we move along to the Spiders Cash ETF. Let's jump on over there. Let's jump on over that way and see what's going on with the S&P 500 headed into today. If we're here and here and here, that's also bearish, just a rejection of the bull flag lows with no support at the previous day high. Watch. Go check it out. But here is your hourly double bottom. Yikes. Right? Something that does this is that same exact warning sign we just shot over here in the ES. If we just kind of like opening drive and sort of noodle around in here, maybe we test the overnight high. By the way, it's like right there. See this 771.25, 771.25, same level. If we rally into it, right? So we're opening here. We rally into it, probably expect to pull back off of it, and then we'll see if we can't get a higher low, right? So if you're remaining optimistic about the market, you really need an opening drive here. If the market pulls deeper, you're going to get a problem, right? So an opening drive kind of required to continue to suggest that we're going to get a higher high on the hourly intraday. Then you can pull back from there, and it's more reasonable that a higher low could set up. Okay, so be thinking about this in terms of sequencing. Remember, I think I've said this enough times on the channel where hopefully it's been ingrained at this point, but the sequencing, the order in which things actually happen is meaningful in the market, right? If you set a higher high, you can then set a higher low. If we're just here and we don't really have a meaningful higher high, if we're just here, it's not the same, right? This is bearish. This is like, okay, fail back into the range. You don't have a higher high. You failed the breakout. This is a flop on NVDA earnings. And now, right, you're really saying that is probably what? A lower high. This is probably a lower high in the overall trend count if this thing fails, right? Now, as mentioned earlier, it was brought up. I think that's a little bit more pertinent over on the NASDAQ, right? I think there's a little bit more pertinent on your NQ futures. So speak of the devil, let's go there now. Let's go to the nasty Nas. Let's just kind of see what's happening from this. Well, let's go to the 4-hour chart. Let's do the top down deal. It is 8:47. Let's get the job done with the Nas, and let's continue along. Good morning, Scotty Clackle, aka Scotty Maserati. Or no, is that too hotty, Scotty? There's too many Scotties. Welcome. Good morning. Nice to see you. All right, getting into the 4-hour NQ chart. This is the range of purgatory. Just absolutely god awful, terrible. You know, hate it. Don't want to be in this, but that's where we find ourselves. We've moved the goalpost too much. We went to the midpoint of the range and said, okay, maybe it'll bounce here. It didn't. We went to the 50 SMA. We said, maybe we'll bounce here. It didn't. We went to the follow through day low. We said, maybe it bounced here. It didn't. We went to the gap close. We'll say, maybe it bounced here. It did, but unfortunately, you've got yourself a lower low in the trend count. So the reason I am more bearish on the NQ versus the ES is because of this thing right here. That's the problem, child. That's the one that can't quite do it. Okay? You have undeniably made a lower low, whereas on the ES futures, you do not have a lower low. So in my view, even if this hourly starts to flip to up, you have a bigger threat for a 4-hour. Whoa, that's a crazy 4. You have a 4-hour LH, lower high threat, not HL, lower high threat. Continuing from there into the hourly chart to get a little bit more granular. Let's see what else we could see here. We know that this is the, whoa. Come on, Thinkorswim. I always, it's the scroll wheel on the mouse. I know what it is. This is the balance box, right? We could call it the balance box. We could call it the boredom box. Regardless of what you want to call it, it is trademarked, it is registered, and it is copywritten. We will have the lawyers send you some paperwork if we have any problems. All right. We have not seen a brigade bolt out of the boredom box, the BBOOBB, which is also in its full entirety trademarked, registered, and copywritten, right? The brigade bolt out of the boredom box has not happened. If it was going to happen, it would look like that for the bears. We now have a look below and fail on the balance range. I see it. I absolutely see it. What does it mean? What does it mean? Well, if you pull back, you sure as heck have to hold a gap fill reversal. You need to hold on to this level. If you cannot see the NQ hold on at 370, let's call it for round number sake. If we're not holding 20, oh wow, I forgot the 9, huh? Whew, terrible. If we can't hold on to, let's try that again. 29, 370. Good night, NASDAQ. Right? Does anybody, just to see, does anybody have a copy of Goodnight Moon on your desk? Anybody? Any copies of Goodnight Moon hanging out on the desk? Maybe, maybe not. Well, if you do, congrats to you. But we might need a copy for Goodnight NASDAQ. Pullback needs to hold in here. If it does, fine. You know, multifaceted, inverted head and shoulders, awesome, rock and roll through the neckline. Maybe we close the gap. Maybe. If this thing rallies first, tests and fails the overnight high, I want to be looking for a short here. I'm going to be looking short on the NASDAQ. I do have it. It's on the shelf. It's on my desk. Let me check. It's in the kids' library. Great book. Yeah. Goodnight Moon. Goodnight Moon. Okay, moving from the 1-hour chart to the 15-minute chart to get a little bit more granular at 8:50 this lovely Thursday morning. What do we have here? Big drive on the NVDA earnings. What I thought was really kind of notable, if we just go EWY, hopefully this is trading like the Kospi did. Let's go, oh, I don't know. Come on. Let's take equities with extended hours on. Sure. This was, okay, interesting here. Rally and then faded. Yeah, I mean, when the Kospi opened up, I don't think we can look at the Kospi on, I mean, we have KORU, but that's not going to, I mean, this is the memory rip that we saw over here. There's the 8 o'clock futures open for Korea. Just kind of compressed. What I'm trying to say is that Korea already sold the move higher. They sold the move higher. You know, here's Jensen's conference call. Memory is the best thing in the world. It's expensive. It's going to go to the moon. Korea saw that on the open at 8 o'clock last night and said, we're sellers. We're sellers. I really wish we could see the Kospi a little bit better. So anyway, jumping back on over to where am I going? To the NQ futures. The main thing I'm sort of looking for over here is the gap rules to effectively tell us if we could short this against the overnight high. Something like that to close the gap. There's a little bit more gap range in here to the downside on the NQ versus the ES. I wouldn't say that the risk reward is, if that's risk and this is reward, I wouldn't say that that's notably skewed more than a 1-to-1. But if the market does want to rally and set up a failure up here and we can get tighter risk reward like that, that's much more compelling to try shorts. There's also some select semiconductors that I do think you could try on the short side, be it NVDA or a handful of others that we've sort of called out as weaker over the last handful of sessions. Anyways, NQ. Let's get into the simplified pathing just so we can get the job done and ultimately see what is up and what is down. Let's do a little something that looks like this just so we can kind of see the entirety of the gap range, if you will. There we go. So the reason this gap, by the way, is dim on the bottom side is because it's filled. It's filled. I just want to remind myself that it was the sort of last chance gap to the downside. If the market rallies out of the gates, I will be looking for fades against the overnight high to pull back not only to the opening print, but probably under the opening print to close the gap and test out bullish buffer bottom end of the range. From there, maybe we bounce around and kind of have some sideways into the close. Remember, we're not out of the woods. We do have J-hole tomorrow. All right, I know that sounds it just sounds terrible to say, but that is just what it is. Okay, we probably hit this with the cyan crayon here for the opening print. If this thing just slides out of the open, it'd be a little tougher to chase that short if we're just like in the first 5 minutes at the prior day's high. I would look for potential bounces off the prior day high and then shorts underneath the opening print. Something that looks like that. A little bit weaker over here on the NAS. I wouldn't be short into the bullish buffer, but I would look to short any possible counter trend rallies that try to get going. If we are just like obliterated down here, pack it up, go home, probably hide the kids, hide the wife, hide the whatever else that guy said in that legendary clip. Hide everything, go to cash. You do whatever you got to do for your portfolio, but that would be pretty detrimental. If the market fails this gap up so aggressively where we are underneath 29.3, right? We were just talking about, previous day high, but if we fail the bullish buffer, good night, nice knowing you, just terrible, right? Moving from here over to GWAGTFI, right? If the market wants to prove me wrong, which it can, there's nothing saying the market can't do this. I would think there's lower odds of it, but the market can do this, right? That's GWAGTFI. That is go with all gaps that don't fill immediately. If this gap up sticks, if we hold up in here near this 29.533, which is the daily 20 SMA, if the market holds in there, then a rally that ensues is not terribly unreasonable, but I just don't know how aggressive I would be. I would need to see a nice hold inside the gap range. So what does that mean? It means we just need to know our levels. We need to know about 29.770s, 29.770. Means we need to know about 30K up here, 30,000, nice easy number. Who put that there? This overnight high, I would focus on the overnight high explicitly, not the gray bar zone. That's going to be at 655. There we go. The opening print is roughly, let's just say OP, opening print will be critical, whatever that actually ends up being. This 50 SMA is right around 460. So let's say 50 SMA, 460. It's the 50 SMA. Previous day high is at that 370. And then, of course, the big hold spot is 29.3. I don't think it's up for auction. I really don't, but we're going to draw it anyways. You guys know what it is. Whoa, what's this guy drawing? Take it easy. We've got ourselves a great-looking version. Great-looking version of the skeleton key, of course. Oop. Oh, no. Oh, no. Yeah, that'll work. It's such an absurd skeleton key that it actually has teeth on both sides. Can you believe that? That's the skeleton key. That's it. Oh my goodness. Where did this thing come from? This is an acute version of the skeleton key that we have not seen in, I think, ever. I don't think we've ever seen this version. Nonetheless, there it is. That is your key level. Key. Whew. 29.3. Wow. Let's take a screenshot of that before that disappears. That would be a travesty if we lost this version of the skeleton key. My goodness. Whew. All right. How about that? Whew, C-Link already bidding for it with the 20 bucks. 20 for the skeleton key. The alternate version, I mean, it could be sold. This is a heck of a version for the skeleton key. Big Spark wants the key with the 10 bucks in the chat. Whew. Wow. Crazy. Skeleton key. In cyan, in the cyan crayon. Big Spark, too slow. you gotta be quicker than that. Gotta be quicker than that, right? Let's take a sip of this thing, and we'll let this simmer. It's 8:57. We're doing fine on time. We got 9 o'clock on the clock coming in just a second. We got $20 going once, not 10. Big Spark was just a little bit of latency, a little bit too late. just a little bit too late. Sarah A with the joke of the day. Now we're talking. Now we're talking. All right, taking a sip of this coffee, and we'll keep moving forward here. The futures pit may have to give it up. I don't know. Whoa, C-Link with the 30 in the chat for the skeleton key. My, oh my. There wasn't even a high bid outside of C-Links. Anyways, I think that, you combine them and you say high bid's 50 bones. Anybody's even thinking about the skeleton key, it's got to be way above. Way above. All right. I think it's sold once. I think it's sold twice, going 3 times. Sold C-Link's way with a 50 total bid. That's it. Skeleton key has been procured. Now we've got 2 of them floating around out there. 2 skeleton keys. One under the leadership and sort of ownership of the futures pit, and another one under the direct ownership of C-Link. All right. How about that? We clear this up and we move into our QQQ Cash ETF in 3, 2, sip, and poof. Let's jump on over into Teresa, joining up as a floor trader this morning. Not your first time here with the Floor 76 badge, obviously a longtime legend of the chat. Welcome back in terms of the official Floor 76 badge. Let's go on over these QQQ Cash ETF charts and see what's going on over here. A little bit of a gap up, right? We know this. We know we're gapping up over here. We know that there is a pretty decent little look in terms of the ability to change the tone of the market. The reason I say that is because we're retaking the daily 20, the daily 50 on the cash market. I don't think that this Qs is out of the woods. I think this is the midpoint of the range. I think that there's still a lower high threat here. I think you can look at this through the lens of, okay, there's a bear flag, right? We're going to be gapping up basically right to here. Is this just the top end of a trend channel? It's not like this is very precise, but you get the idea. Does this fade, and do we just stay in the trend channel, break a trend line, and good night, right? That is one of the things I am concerned about for the Qs. That is one of the things I am worried about for the NASDAQ to ultimately drag the market lower and keep us in sort of what I've dubbed as, at least in last night's video, we dubbed it, purgatory chop, right? PC, purgatory chop. So we'll see what happens off the open. Gap rules will light the way. The overnight high is pretty close to about 720s, which is right around in here. I'll be watching the NQ, but if the QQQ cannot take that out and comes in, it basically needs to hold where? Over a prior day high, needs to do something like this. We need to see bullish buffer sustain, and that level of the downside, your line in the sand, is at 711.65. 711.65. Do we get something? Because keep in mind, we're opening here. We're not opening close. Prior day high needs to do something like this. We need to see bullish buffer sustain, and that level of the downside, your line in the sand, is at 711.65. 711.65. Do we get something? Because keep in mind, we're opening here. We're not opening close to 720. We're pushing back, right? We're opening here, give or take. If we come in and do something that looks like this, fine. Natural, normal stuff, inventory correction. When we get here, you bet your bottom dollar that if this market is going to sustain, you must, no ifs, ands, or buts about it, must see a hold over 711.65 for something that looks like this in the near-term future. If this doesn't happen, right, you will essentially be avoiding what we're looking for is the inverted head and shoulders, right? Here, well, that's actually like double head, but let's try that one more time. There we go. This is what makes up that right shoulder. We're looking to build the right shoulder ultimately, an hourly, and potentially, it depends on how it happens, but daily high or low, around 711.65. The reason I say it depends on how it happens is because if we do get an opening drive, and we're up here, okay, different story. You pull back there, could also qualify as a daily high or low. Okay, so that's the way I'm thinking about this. The NASDAQ is not out of the woods. I like the way that this was framed earlier today. It's still guilty until proven innocent. It's guilty until proven innocent. Shout out Steven for that one, right? So you just have some work that needs to be done here. I mean, this is where you're opening. Is this chart saved? I don't think the chart's saved. I think you could still argue that this is like a weekly high or low. Hard to argue a daily high or low because of what's happening over here and the failure, in the lower low there. But is it a weekly high or low? Perhaps, right? Perhaps. Okay, so that's kind of what we're seeing as it relates.
You already have a good strategy, but in one bad trade turns into revenge.
Sigh of relief. I can see what I'm looking at now. Right? If we're over this blue line, okay. If we're under this blue line, oof, problems. Right? That's the chart. That's the chart right there. Just a simple 50 SMA. That's it. That's pretty something poetic about just one line on the screen like that. No levels, no nothing. Just there it is. It's quite nice. Anyways, it's not nice enough for me to actively action off of knowing where we're at. So once again, this is really kind of a dangerous zone where we must establish hourly higher lows to continue this trend and push higher. If we do not, if we are just noodling around the daily 50 and slightly lower, it could be a drift, it could be a little bit of a fade, a dribble drabble ahead of not FOMC, but Jackson Hole. That spells kind of problems. That spells some problems. All right. If the market rips, let's just be optimists here for a second. Let's be optimists because optimists typically win. If we're being optimistic about this market, remember we're opening kind of right in here. If we get a big rip right out of the gates, like, whoa, geez, my goodness, strong market, big trend higher, right? If that's what we get, I'm not saying we will get that. I'm saying if we get this, and if we tag the bottom of the gap at 722.20, there is room to then do something that looks like this and establish a much, much more dominant and secure higher low. Okay? I just want to be very clear about that outcome. If the opening drive is substantially up and we interface with 722.20, if we're at least making an equal high to what we have from back over here last week on the gap down, that's Tuesday of last week, right? If we can do that, there will be much more room to procure a substantial and structurally relevant higher low right in there, okay? Over the 50 SMA. That is a back pocket situation. I don't think it's the top priority, but it is something we will pay attention to if it starts to shape up. Okay? Let's take a sip of this coffee and we will jump on into our Rusty Russell with 9:05 on the clock. We'll get the job done here. All right? Okay. Clearing it up, 3, 2, 1, poof. Let's jump on over to the Rusty Russell. Stay in your seats. Do not get up and go to the water cooler. We've seen enough of that. We've seen enough water cooler activity. The Fiji water, I know, we're eco-friendly and all the whole 9 yards. We've got reusable water bottles and cups, and the Fiji water is not, it's none of that stuff. Anyway, you're in a balance range on the Russell. Stay in your seats. There's no need to overanalyze a range. We will either do something over 30.25 up there, or we will do something underneath 29.95. That is it. Okay? No need to overcomplicate Mr. Rusty Russell over here. Of course, the market's going to hold its breath for none other than JH, Jackson Hole. Okay? There's no apostrophe S on that. It's not Jackson's. Okay? It's Jackson Hole. I've never been out there. I got to say, I've never been out there. The views look amazing. I never been able to board out west. I would, not that I've never been able to. I could buy a plane ticket right now and go out there, but just never really had the group opportunity or the desire enough so to go do it. Maybe that's something that we do this winter. Get a little bit of that West Coast snow. Not West Coast, not the ice coast as we call it over here on the East Coast. Whew, makes us tough, makes us rugged, I guess you could say, on the mountain. But this is nothing like, from what I hear, that West Coast powder. Anyway, Little Park City lap. Okay. All right, Jeff. All right. All right. That's the Rusty Russell. We'll keep it simple on this. Obviously, waiting for Jackson Hole because of what the impact on rates. Excuse me, dying over here. The impact on rates will have is kind of what we're trying to be mindful of on that, right? So there's that one. All right, let's clear this up. Poof. Keep it simple. Out of the range, great, bullish. Look above and fail. Certainly problematic. Would expect lower. And then, same is true, but opposite on the bottom side. Literally balance range rules in place. I know it frustrates people because it's not the answer anybody wants because, nobody really knows the future, but this and then this, these are literally the outcomes for the Russell, okay? Nobody's favorite, but those are the 5 rules for balance. Look above and go, look below and go, look above and fail, look below and fail, or you just stay in purgatory. That's it. Moving forward, jumping on over to the IWM, same concepts, different numbers. Here you go. There's your balance range. Don't overanalyze the range. If you're up and out, great. Do we close the gap? Question mark. If it fades back in, problems and probably lower in the future. If we do something that is just like a fade off the highs to here, very reasonable. Little drive lower, gap fill reversal off the daily 50, great. That would be a little bit more bullish. If this thing just slashes right through it, red hot knife through, I would even say hot butter. It's not only just a hot knife, it's a hot knife and hot butter. So, the mushy kind of butter, you leave it out on the counter. Geez, careful now. You leave it out on the counter on a hot summer day, that type of butter, you know what I'm talking about? Well, not only is it mushy there, but you've got a red hot knife blade, and you do something that looks like that, you're obviously going to have some problems under the 50 SMA. So what you're focusing on here is the tempo, right? And I think this is like an under talked about or an underutilized indication, right? The speed of the tape, the SOT, the speed of the tape, the tempo of the market is so critical. If the market is just like ratcheting down into this move, like very quickly, if you notice that the speed of the tape is very fast, very aggressive, are you really looking to buy that 50 SMA on the first little kiss? I don't think so, right? Not really. If the speed of the tape is like, oh my God, we're there in 2 minutes, and then, flagging down, that's just not a situation where you're resting limit orders, right? If the speed of the tape is slow and lethargic and, opening drive and a little doji and a little bit higher and a little bit lower, and then finally, midday, we make it down here, maybe there's some structure you can risk against, right? Speed of the tape is critical. It's a key concept there. As it relates to what you're doing in the balance range, okay? Moving forward, NVIDIA, let's see what's going on with the NVDA. Obviously, you're opening much higher. I will just throw on our earnings set here. Ignore the text, which might actually be very difficult to do on this particular view. What I'm trying to illustrate is just where we're at relative to okay, that works. The call and put walls, that's better. Okay, so up here, there's a lot of open interest on the call side near this 220 spot, 225, and even the most open interest at 230. So a lot of stock will potentially come for sale if we start to get underneath that. If we stay above it, maybe that keeps some dynamic hedging in place. Obviously, if market makers sold those calls, they need to go out and do what to neutralize the risk? Well, to get delta neutral, if they're short calls, ultimately negative delta, they need to buy back shares to offset and truly come back to neutral. So it doesn't mean it must be like a big gamma squeeze today, but just keep your eye on the ball. If you're over 220, it does mean that the options market makers are starting to feel some pain, a lot of pain over 230. Any opening drive over 230, oh my God, right? Maybe squeeze. But the base case, and if you just go back and study previous NVIDIA earnings conference calls, or at least previous reports, I mean, look at this report, right? Big failure at the highs and just gets absolutely crushed on, oops, sorry, what's going on here? Where's my, here it is. This is the earnings day, my apologies. Not a gap up, but just tries to rally, gets crushed. You go back even further. There's many of these examples. I think the last, I looked last night, but I did not count the number. Yeah, here's another one. Just fades lower on earnings. One more. 360-day chart. There it is. This is the most notable one, right? This is kind of the kill bar back in the October timeframe. October 20th and then November 20th. 1020 and 1120 bars. Well, the 1120 bars, courtesy of NVIDIA earnings, gap up just gets absolutely rinsed back underneath the daily 20. So it does have a precedence of fading off of the gap up. NVIDIA does here, so I would just be paying attention to pretty much. Let's just turn off those earnings numbers again, or commentary. Whatever this local low is you kind of fail right around this 221.60s. That could be some sort of a compelling look underneath the opening print of this bar. Yeah, I'm going to go with that. 221.65, around in this neighborhood. You start producing lower highs underneath that. You could have some problems there for NVIDIA, right, to fade the gap. Come on in, do something that looks like that. So generally, I don't think you want to be chasing longs up here. I really don't think you want to be chasing longs smack on these highs. I could be proven wrong, and that's fine. I will let it drift, and I will let a new setup, a responsible setup emerge. But for now, I think the fade watch is on, for NVIDIA. Moving forward to Apple, I don't think this is a very interesting chart this morning. You're just opening in the middle of the moving average stack. This is chop. I don't think there's much to do here. You could argue it's a higher low, and that's fine. But what are you going to buy that in there? I don't think so. Not me. Let this thing be a double bottom. Let it reclaim the neckline. If it is going to be long, let it build out some structure here and let it get into the gap if there's going to be some better upside movement. If it drops the double bottom lows, 307.50, maybe you try some shorts. Let's go on over this Microsoft chart. Come on, Thinkorswim. Come on. There we go. Complaining, yelling at the computer. This is interesting, but it needs to be lower. It needs to be 487. It needs to be a deeper pull into 487. It needs to be here at the daily 20, which is also, by the way, confluence with the 8. I know it's not up on your screen right now, as well as the 5-day. So 8 EMA, 5 SMA, 20 SMA, all in the same spot, close to about that 487s. A little look below and fail of a previous day low would be a nice spot to try to get long on Microsoft for higher. It's trying to round out this little low here. It did not interact with this gap. If the market does go lower, as in the Qs fail the gap up, I would maybe just be patient and look for a 475 interaction. But for now, for today's session, just watching previous day low. Next up, Nancy, what's going on with Amazon? This thing looks weak to me. It looks like it wants lower. This is like descending triangle over here. You could call it bear flag, bear pennant, whatever. It looks like it wants this, right? It looks like it wants 50 SMA, maybe something off of that. We reevaluate. If it is going to be long, that's fine. Let the base build out. This is like an hourly base. It's not a daily base, but things are fractal. Let the base build out. Let a little bit of right-hand side come in over that 262. Maybe it's a higher low from here to here, and then we're up and out over into that 271. We'll see. Like, this is a big TBD on Amazon. Preference would be that it starts working itself like this, and then we can maybe try it against the daily 50. That's my preference. Moving forward to Google, this thing has just been kind of a train wreck. Where's my, come on now. Thinkorswim, maybe it's user error. I know it's user error this morning. This Google looks toast. This thing looks like it needs to test the daily 200. It looks like you need to do something like that. And then maybe you're back higher, shake out the bottom end of the flag, say, oh, Google's the crappiest company in the world. Just realize that the screen is frozen. I'll just wait for a second here. Let me just wait for a second. Anything? Come on, computer. Did you try turning it on and off again? Yeah, there we go. There's Google. Google is now on the screen, or at least should be. And Xavier Jones, GTA 6 gameplay releases today, by the way. We're going to pull the Chris Camillo trade and just buy it because the gameplay looks good. We buy and take two. TTWO. All right. This 200 SMA is a key spot that I would be paying attention to around this 335.15. Just, maybe Google shakes out and we test a little lower, rock the boat a little bit, and then can go higher from there. But this has been a pretty poor interaction off of the daily 50 and 20. Moving forward to Broadcom, 9:15 on the clock. Let's get the job done here. On Broadcom, we've got ourselves a potential rally attempt right after undercutting this low. So I would start looking for a rally attempt to the 200 that then turns into a fade underneath it. I think that's shortable. You might not be able to build a lot of cushion if you're trying to hold this. We know Broadcom trades like garbage, so you're probably just looking at shares. You're probably not looking to options trade this, but some shares up against 370 wouldn't be unreasonable to come in here and maybe test some of these lows around the 350 spot. That would be the ideal look for the shorts. You could also alternatively wick through the 200 SMA, close the gap, kind of do something that looks like that. The only time I'm getting bullish on Broadcom is if this thing wants to show me this, and then it's probably here, right? Over a flattened out, maybe declining by then, we'll see. Flattened out or declining 200 SMA, you got to retake that 370 spot if I'm going to get bullish on this Broadcom for like a structural shift in the trend count, right? Moving forward to this metaverse, let's see what's going on over here. Let's take a closer peek at the verse. Settling the lawsuit, fantastic. I think for today, you're probably watching like that, or you're watching like this, and then like that. Those are the outcomes I would think for Meta, right? Pretty good. I would think that because the lawsuit numbers came in better than expected, you have some bullish sentiment, around putting this thing back on. Some of that uncharted territory, or like, oh, we don't know what it's going to look like. Some of that's been cleared up. There's still some things that they need to hammer out. Apparently, some user restrictions or some age limit restrictions, or I don't know exactly what it is. That could hurt the user base argument, but I think that the meta play here is no longer just about user base. It's probably about the advertising platform that they're building, right? Or have been building, will continue to build, right? Moving forward to MU, what's going on with MU? And that's always been the play on Meta, anyways. But how do they use AI to really serve their ads better, make the process better, yada yada yada. Memory is really gapping higher because of what Jensen said last night. You're getting a nice push here on MU, SanDisk. We could go through the whole list. There's SNDK pushing through the overnight as well. Here's, believe it or not, hard drives. WDC is even moving higher overnight. STX is even moving a little bit higher in the overnight session. How about our good friend SKHY, SK Hynix, still moving higher in the overnight session? So those things are up. Also, QMCO is technically I believe it's a memory name. I know the name is Quantum blah 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 for the stock, but I believe it's a memory play, if I'm not mistaken. I would have to double check myself on that one, but QMCO stock. Let's just put that in the. Yeah, I mean, it's called Quantum Corporation, but it's a data storage management and protection company. There you go. Okay, they protect video and unstructured data through a data lifecycle. Yada 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 yada. Okay, that's it. Anyway, they just went public not too long ago, and a couple of earnings cycles in. Stock is just kind of a ripper right now on some light volume, but momentum to the top side. Okay, we got there from MU, which means we're on. We didn't talk about MU. We'll talk about it. This chart is Swiss cheese, which I hate. Right? You got Swiss cheese here. You got Swiss cheese here. You got Swiss cheese here. You don't really have an active trend. You're a little higher, right? You try to do this, pull back, higher low over the multi-day high. Psych, lower low. So you got a lower low, and is this a high and a higher high? Yes. Is this a lower high? Are you gapping up into here? Yes. Just very, very loose and wide chart. The price action's not tight. If it does pull in and hold the daily 50, that could be compelling for longs. We'll see. Jensen really reignited. Jensen really reignited this trade in memory. It's waking up big time overnight. The key question just becomes, does it hold or does it fade? Moving on over to Tesla, and I'll just let the chart light the way. I really don't have an opinion here off of the open. The chart is just too wide and loose to really have a opinion in terms of the chart structure, technically, right? This Tesla, I think, is a rally to attempt the gap again, look above and fail on this 349.50 is a potential short, and then you start building out left, head, right shoulder, maybe through the neckline is weak. That 342.10 is a key spot because of what it represents from the earnings gap down bar. Okay, so head and shoulders emerging on Tesla. Pretty ugly Christmas tree action here. Intraday, it was mirroring that on the Tuesday session, and yesterday just getting pushed away from the gap close. Next up, we've got JP Morgan. A little bit of, not really a left shoulder, but head and right shoulder building out over here. Very clear spot, but unfortunately this morning you're getting a pushback to the downside. So maybe those XLFs don't look great. Yeah, XLF's getting walloped over here. So much for a pretty chart. Was looking really nice, that XLF, but this is pretty ugly as it relates to banks. Go to AMD. I think AMD is a short. I want to see it rally into the previous day high, fail there at 491.50, and then potentially come back in for a move towards these lows at 475.85. AMD shorts. Let's go to Intel and see what we got going on with INTC. Intel probably needs more of like a 2-3 day bounce. Like, I don't think you just want to short it here. That's my first instinct is to okay, this is still just too low. It's too close to this key support to want to be short here. But if this thing wants to get in gear for, like I said, 2-3 day bounce, that's part of a playbook, right? Then fine, we could short it there at 95.35 and have a much better spot to risk against after, a whatever percent bounce off the lows. Let's just hit this real quick. What would that be? From lows up to that level, 10% bounce on Intel, fine. All right, let's see if we can't fade that thing off of 95.35 for lower. It's just been acting like absolute garbage recently. Okay, so that's what we got as it relates to the core list of companies here. I don't think there's much else to dive into. We will go quickly back over to these ES futures and check in on what's going on here. You've got your range, kind of brigade bolt action happening over there. You do this, you do that. Maybe things are a little bit more impressive. You do this, and it's kind of good night, right? Nice knowing you. You go to this NVDA, or sorry, not NVDA. You go over to this NQ. Gotta hold. Must hold 29.3s. A rally would be even better. That allows you to pull in for a stronger higher low and then go. If this thing fails 29.3, good night. Nice knowing you. Maybe Kevin. I mean, this would just be so frustrating, and it's fine. Like the market is what the market is. But how frustrating would it be if we do actually crack this, and then tomorrow at Jackson Hole, Mr. K Dub says, "Oh, we're actually going to issue a little bit more guidance, and we're going to do this and we're going to do that, and I think we're thinking about lowering rates at XYZ time once we see XYZ metrics do what we were looking for them to do." That's a far cry from the way he's certainly positioned himself right now. But again, how frustrating would that be? Just if the market breaks the level, comes in, we bearish, right? And then K Dub tomorrow is just like, oh, we're here, right? So it is what it is. I don't want to read into it. Let's deal with what's in front of us right here, right now, right? That's the key thing to do. We are dealing with what's in front of us right here, right now, this morning. What does that mean? It means we're focused on the NQ gap above us, or I shouldn't say above us, but the gap below us, and the potential for a move to get into bullish buffer and do something that looks like that. We're focused on potential short ideas that fail the overnight high. That's the focus for this morning's session. Okay? Have yourself, what is K-Dub? K-Dub is Kevin Warsh. K-Dub. Kevin Warsh. He's the Fed chair, my friend. Go ahead and take yourself a sip of coffee. Ease on into the desk this morning. Don't do anything too crazy out there. Hopefully, price action continues to get better as we move forward in time here, closer to the time frame where Wall Street gets back to the desk. Labor Day, not this weekend, but of course the following Monday. That is potentially something that would kick off. We'll see. Maybe a new, smoother trending market. So with that being said, big shout out to the usual suspects. You guys know who you are. We've got Sarah A, Pandemonium, Teresa joining back up as that floor trader this morning. We were looking for them to do. That's a far cry from the way he's certainly positioned himself right now. But again, how frustrating would that be? Just if the market breaks the level, comes in, we bearish, right? And then K Dub tomorrow is just like, oh, we're here, right? So it is what it is. We didn't talk about MU. We'll talk about it. This chart is Swiss cheese, which I hate, right? You got Swiss cheese here, you got Swiss cheese below. It's too close to the Kevin. I mean, this would just be so frustrating, and it's fine. Let's bounce off the lows. Let's just hit this real quick. What would that be? From lows up to that level, 10% bounce on Intel, fine. Right, let's see if we can't fade that thing off of 95.35 for lower. It's just been acting like absolute garbage recently. Okay, so that's what we got as it relates to the core list of companies here. I don't think there's much else to dive into. We will go quickly back over to these ES futures and check in on what's going on here. You've got your range, kind of brigade bolt action happening over there. You do this, you do that. Maybe things are a little bit more impressive. You do this, and it's kind of good night. Right, nice knowing you. You go to this NVDA, or sorry, not NVDA. You go over to this NQ. Gotta hold. Must hold 29 threes. A rally would be even better. That allows you to pull in for a stronger higher low and then go. If this thing fails 29.3, good night. Nice knowing you. Maybe Kevin. I mean, this would just be so frustrating, and it's fine. Like the market is what the market is. But how frustrating would it be if we do actually crack this, and then tomorrow at Jackson Hole, Mr. K Dub says, oh, we're actually going to issue a little bit more guidance, and we're going to do this and we're going to do that, and I think we're thinking about lowering rates at XYZ time once we see XYZ metrics do what we were looking for them to do. That's a far cry from the way he's certainly positioned himself right now. But again, how frustrating would that be? Just if the market breaks the level, comes in, we bearish, right? And then K Dub tomorrow is just like, oh, we're here, right? So it is what it is. I don't want to read into it. Let's deal with what's in front of us right here, right now, right? That's the key thing to do. We are
Order cancelled. Order filled. Order cancelled. Order cancelled. Order filled. Order filled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order filled. Order filled. Order cancelled. Order cancelled. Order filled. Order cancelled. 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 Order filled. Order cancelled. Order filled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. 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 Order filled. Order cancelled. 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 Order filled. Order cancelled. Order cancelled. Order filled. Order cancelled. 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 Order filled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order filled. Order cancelled. 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 Order filled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order filled. Order filled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order cancelled. Order cancelled. Order filled. Order cancelled. Order filled. Order filled. Order cancelled. 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 Order filled. Order cancelled.